Morning, morning. So the time is it's 10:30 a.m. 29th of September. So busy trading and I don't have time to do videos or produce educational stuff. This is I'm not really a coach, I'm more of a trader. So, but today I thought of making a video because yeah, some after doing some after producing some results. Now I'm kind of like in the mood to produce videos. Sometime right now. So some traits that we're gonna be looking at that I was looking at, and I will still be looking at least for this week. All right, this week, 28, 29. Okay, right. Okay, so trades I'm looking at this week would be pound dollar, Aussie dollar, pound yen, maybe some Aussie Kiwi. So let me have a look at the DEX. Okay, see what this is all about. Let's go daily. Let's go daily here. Let's see what we have, huh? So okay, this was like a shakeout move. Basically, people who went in on the buys. There are many reasons why people might buy. They might have been looking for that. So people who did that naturally were destroyed when that happened. And the lot size was too large and not measured properly, probably a destroyed up here. Okay. It looks to me that this currently is also in a downtrend, the DEX. Currently in a downtrend. So it's come back to this level over here, trend line over here. But let me see. Hmm. If the dollar falls, if the dollar does fall, if this does happen, okay, I'm not saying that it's going to happen, but I do have this plotted out. You see, okay, so this down, some. There's going to be some divergence over here for sure. Okay, but anyway, we can just put on some RSI and just see what that's all about. Right? So let's turn on our friendly RSI. You see here? Oh yeah, so there'll be some divergence over there. See, so this one was up. So this was on the cards. So if whoever was trading this up to upside probably did quite well. Okay. Um, which means like the pound dollar and Aussie dollar stuff like that. Any pair that has a dollar at the bottom. Hold on. Let me just look at pound dollar. You know what? I think I'm gonna put them. Let me just put them side by side for now. Let me just have a look at pound dollar. Let me put this 1 hour. See what's going on over here. So it's a daily chart. Oh yeah. So when the dollar shot up, so I'm just moving this. So if we just focus on this side, see, it's interesting, right? And you focus on this. So when we just move from here, you look at my cursor. Generally, it was down. So you can see as this went up, generally this went down, right? Even though this is a 1 hour time frame and this is daily time frame, but it's still the same thing because the cursor is synced together, right? From here. Okay. So if you wanna have a look at the 1 hour on the DEX, actually it's pretty much the same. But okay, so DEX here, see that? Now bus produce a 1 hour for those who need to see 1 hour. See. So as the DEX went up, and dollar got strong, so everything else came down. So this is in relation to the dollar. The dollar strength, so stuff fell. That's it. Okay, so let's go back. Let's just remove this. All right, let's just remove it. So dollar, the dollar strength. The dollar strength was causing weakness. Let me see. Let me just think a moment. So I just want to take a look at that again. Let me just see pound dollar. This part was also kind of interesting, actually. So from here to here, this portion over here was when the dollar index was moving and giving impulse upside, a strong move, right? See that? This one was actually coming down, right? From here to here was a consolidation or correction, and followed by this phase down. This one went up, so the dollar gained strength, and then the pound dollar dropped. But what I want to say is this part over here is interesting. See here? So this part here got a little bit funky. So the dollar just kind of stayed went nowhere, and yet there was not move. So this one was because of the pound. The pound gained strength here. There's currency strength on the pound. So this is more of a pound movement actually, right? Okay. So now that we worked that out, okay, we expect. Well, let's say put a trend line here and you draw, let's say that over there. But this would be a kind of sketchy, very early kind of entry. So if we think that if we think that this is going to kind of fall, maybe it falls there, but this can also come, go back up like this, and then you can do that as well, right? You can do more complicated movements to shake people out of the market before it actually makes its actual move. But when the dollar does fall, then that would mean plenty of upside for the pound dollar pairs, basically pound or any pair that has a dollar at the bottom, right? So that's why pound dollar, Aussie dollar, euro dollar, I would be interested to look for them to the upside. So now, just to now, I know there are people out there who actually probably might use indicators. So let me just slap some indicators and tell you, say people who use trend following indicators like let's say Ichimoku. Let's just throw this in there. So we go to maybe a forward time frame. Now, if you were to look at the Ichimoku, right? So the rules of Ichimoku is it's a downtrend. Like all this is, hold on. Let me just remove some of these lines over here. Just to put it in perspective, why it pays to know a little bit more than the market, what the indicators show, which means that if you were around here, and you're looking for this move up, this move up was the correct move to look for actually, mainly also because of this divergence over here. So if you're looking for the buy, to here, if you broke, maybe you bought again, that's okay. But in any case, the bigger move, right, is actually not impulse, not this. This is actually the wrong side. The upside was the bigger move, so to speak, right? If you scalp or do anything under the trend, this is the bigger move, not this way, right? It's not this way. So when you're reaching somewhere at the end here, thinking that this is the move is actually not correct. So over here, this side down was correct. Over here at the end, this is not correct anymore. So the upside was the bigger move, right? So I think for some people who were watching my FX book, right, you saw me trying to always try to look for the up, right? I was thinking like so many trades, seeing so many trades, man, incredible amount of trades, and finally it went basically, right? Uh, so the up move was the right way. Now we were speaking about this potentially being able to drop, right? And if I'm going to draw a correlation to this, now the thing is that this Ichimoku doesn't really help much because this actually gives people the sensation that they're looking for the sell always. And then when it comes up here, guess what? They try to short this. And if they have no stop loss, then they are now deep in drawdown because they're on the wrong side. And if they have stop loss, hopefully they'll be stopped out already because this one, you always consolidate. See how it just consolidate and then you just go, and just go. You can always just go and then just go and just go. So if the idea was wrong in looking for the downside and it just went too far, you just have to be stopped out. Now, unfortunately, a lot of people have wrong lot sizing. So when your lot size is a bit too large, it's going to be very hard to kill off the trade. So my only advice is to reduce the lot size. I would say for a lot of people, lot size needs to be reduced. You really need to calculate how much you're able to lose each week, right? The fastest way to know someone is not really a trader. Now, I've met people who talked to me before, and some would show me how much they are making and such. The truth is that real traders don't really care about how much they are making, because there are so many problems that you need to solve. Traders are thinking about let me, if I can give an analogy. Let's say there was some Americans back in World War II. It's a war story where the Americans were in a town, right? And then they were being attacked on all sides. The German army was closing in on them, and they had to rotate. The American soldiers need to rotate around, and imagine soldiers coming on the east, on the west, on the north, and the south, and the northeast, on the southwest, southeast. Then you have to rotate your mortar, you have to rotate your crew around to intercept the forces that are coming on all sides. When we are busy when the soldiers are busy trying to fend off the attacks, the only thing a person can be thinking of, right, is not how many people they are killing, but rather how to survive in the market, how to defend well, how to fend off the attacks from the north, fend off the attack that's concurrently coming from the south, and then when you think you're done, suddenly someone comes from the east. People are trying to close in on all sides to take you out, and that's like the forex market. Rather than thinking of how much money we are making all the time and then showing people how much you're making, the thought is a lot more on how not to lose money, how to manage the trade. Okay, how much money can I afford to lose if this goes wrong? Where should I cut? It's more on that, and then that's why the money comes. Okay, and once the money comes, it's very fleeting. It's like scoring a goal. When you score a goal, then after that you're in search for the next goal, right? So Americans, if you're fighting for your life and the enemy, the forex enemy, is coming at you from all sides, you're not thinking, "Oh, I killed a guy," and you give your friend a high five and look, these are how many people I killed. No, it's not that. You think, I need to survive. There's another guy coming from the other side. We're constantly thinking about how to survive. So in this forex market, as a trader, you see stuff like that. Even though I'm thinking, even though Ichimoku is coming down, but I'm not looking for the sell. This one is possible for the sell, yeah, but not this one. Why? Because of the conflict in signals here. Now this also, there was divergence, so this one actually went up. So divergence here, this one also went up. So at the right point in time is where you're looking for the sell. So for some people who actually did this, and maybe they thought this was something here, and then it took a breakout here, and want to sell, stop here, then of course they are stopped out over there, right? So this is quite a wide stop actually. So that's what we need to be thinking about always. Okay, when things can go wrong and how to solve them. And, and now when it comes to the okay, where to now, right? So let's say we're looking for the buy always, and we took our profit on this break, or maybe you oriented here and took a little bit more. That's fine. But in any case, now that you've taken some money out, that where to now? Now, if you're, now that I'm looking at this one over here, okay, let me just go maybe just another time frame up, right? So let's say we're going to do stuff like this one over here. So all this is cause for worry. It's not a place. So someone who trades who is interested in the dollar, this is not the kind of place where you think the dollar that this is going to continue. So if I don't think that the dollar is a bit too soon, it's true. What will make it good is if this one came down here and give some correction, something simple, right? Or maybe something like this, like that, would be nice as well. Like this. This also are all good. These are all sells actually. All right. Sell moves are they're basically shake out moves to shake you out of the market. But you know that this is down. All right. So if this is the bias is down, and also because you see I have this C, you see the C here. I have this. This is a very long shot, but it's there in the back of my mind. Trend line is there. Um, and also if this one can make actions that shows that the dollar is getting weak, so if this for some reason the dollar starts to come down, which I want it to, it means that this Ichimoku could potentially be turning. You see, eventually this Ichimoku was kind of up, right? See, it's all kind of up, but eventually it still turns. So if you're here still looking for up, that means the trader is the last one holding the bag, whoever it is, right? So don't try not to be the last one holding the bag when things are starting to turn. Or even here, if you're caught buying here, this did not make a full reversal like that, but still caught holding the bag, right? Because this came down, this one came down, so you enter for the buy. Well, yeah, you're caught in the retrace, big drawdown, right? So in this case, whether it's a retrace or whether this is is this retrace coming down, at this point, I'm more interested in the upside. I'm more interested in the upside like that, right? At this point in time, yeah, interested in currency strength. So this would be an early turn. So some people would rather wait for this, go up, come back here, maybe somewhere around the cloud here. Hopefully they can buy. That is one way as well. That is one way. So something like this, and then you buy. That's one way. But in trading, there are different phases of the trade. You see, so this is something more like your price goes up here. You know, somewhere here. This is the clouds over here, and then this is a correction. You buy from here. That could be more like the mid phase, because so what I'm trying to say is, let's say price comes down, it goes up like this, it goes up like this, and then you see this is the phase of the market. So this is the early phase. This one is more like the mid. This is more like the end. Right? They all have their problems. To be honest with you, they all have their problems. When you get on the early phase, you think you can make money here. Well, if you're not good at it, this just continues down. That's where you lose money. At the mid phase, if you think that this is coming here, you can go up, but this comes here, it goes up, and then it drops really sharp. You lost money. And this is of course the ending phase. Some people think they use volume, they think it's going to turn, going to turn, going to turn. It turns, it shoots down, it shoots up. Well, and they were looking for a kind of like a bigger move, maybe from here to here. They caught the top here, but as it came down here before they could take profit, this one shoots up. So you need something like here. You see, it goes up here. So this one actually was quite pleasant, but you know, they can actually shoot down like that and then shoot up. And this one just continues to crawl, make a pullback, top, shoot up this way. It's like a reset. Hit the 382, it resets here, do a 1, 2, 3, 4, 5. So they all have a potential place to look, a potential way to take money away. So getting good at either of these phases is a way of making money. So if you're good at the early phase, it could mean that you're taking some, but you're not taking the entire piece, right? So let's say you're taking money from here to here, but you don't care about this mid. So you get from here to here first, whether or not it goes, or whether it just goes a little bit and drops again, well, you already took your money. You already took some money out here. Then when it drops, it doesn't matter, because whether it corrects and drops or whether it pushes up and goes up some more, they all have one thing in common: a certain amount of pips, and that is a way to trade as well. Okay, but that's trade management. Some people take some and then leave some to see whether it continues to go. All right, that's also one way. And then at the mid stage, there's a mid stage over here. It's when you wait for price action to pull back like this, and then you try to pull back like this. You try to enter somewhere around here. Trend following systems like Ichimoku, moving averages, all this can be used for that as well. You try to find out where this point is. Otherwise, it can feel like you're in limbo. You see, so this one gives a little bit of some sort of feel that we know what's going on, right? Some sort of feel. Then the ending phase here, like, is when people use stuff like RSI or MACD divergence to try to figure out if this is coming to an end, and then try to look for one move down. That's also a sound way of trading. So depends on where you are, here, or here, right? Did phase, some people also use candlestick. So if this is going up, maybe they look for some kind of candlestick like that show there's some strength, and then some strength or some candle change, maybe they just buy, and then they put a stop somewhere there, hopefully that they are right. So if they're wrong, this one came here, it did a correction, it's supposed to go, right? But guess what? You go and then it down. Then you have to be stopped out, right? So depending on which phase we are in which phase we are. So right now, this one for me, I feel it's kind of the ending here because of this. Sorry about that. Because over here, just look for some RSI divergence over here. You know that this is something like the ending phase. The end of an era is the beginning of a new. Birth of a new. Well, the death of a phoenix is the beginning of a newborn phoenix. Yeah. So this one will be the early. The start. So what I'm hoping for right now is that this one is a start. Right? If this is a start, continues to go, that would be a very good thing. That would be a very good thing for me. I may not keep the trade all the way to by Thursday, Friday. I probably will exit the trade. So, but I hope that this strength does continue to the upside. Actually, yeah, anywhere here would be pretty good. Let me see. I'm hoping that at least this side will break over here. That will be quite good. So right now I'm living through this correction. I did take some profit as this went up here. But then I switched over. I didn't continue here. However, I continued my trade adventure on the Aussie dollar side actually. So something like this over here. So over here we are thinking, what I'm thinking is, let me see, what's the next doing? So on this side, the DEX is kind of falling. Okay, let's see over here. See this part over here? See that? See as this one starts to fall. This one starts to go up a little bit. Here starts to fall. This one starts to go up a little bit. So, well, if I'm lucky, if this continues to drift all the way here and even do this, come here, if it really does break out, oh la la. talking about 12%. Let me see, maybe a 12% increase on the account. Okay, so that's the dream. That's what you hope for. All right. So yeah, that's the pound and awesome. I mean, I'm gonna keep this video a bit short, so I'm gonna end off right now. Okay, so thanks for listening and take care. Bye bye.